Hi there, and thank you for tuning in to DukascopyTv. Today I'm joined in the studio by Anne Rethoret from Swiss financial magazine La Vie to discuss microfinance with Guillaume Taylor, co-founder and managing director of Quadia Impact Investing, and Melchior de Muralt, representing Blue Orchard. Over to you, Anne.
Thank you, Dorian. The last 10 years have seen the most important evolution in terms of financial influx in the sector of microfinance. Companies such as Blue Orchard have been creating an array of funds to allow foreign investors to place their money in this sector. Joining us today, Melchior de Muralt and Guillaume Taylor. Please let us know a little bit. Is it more about the question of personal involvement or rather a return on investment?
Very good question. My deep belief is that you need to have the two motivation to start investing in microfinance. It's typical of social business. So even in the world of social business, you have the two dimensions, social one side, business on the other side. So of course there are very complex financial behind it, but first of all, at least us at Blue Orchard, we try to address our services to investors who really believe in these two dimensions. Microfinance is, and that I think it's important to remind it today, is an important tool to alleviate poverty. If you look at the Millennium Goal of the United Nations, poverty alleviation is one key objective to succeed the globalization, to create an inclusive society, and to avoid gaps between the have and the have-not. But at the end, for wise investors, contributing to reducing this gap is maybe the best risk management tool you can have to preserve your wealth, because you will never see down the road a global world completely connected through internet with huge pension fund financing, golden retirement schemes on one side, and people having no access to finance, to insurance, to pensions, whatever. So I think the two dimensions, you cannot separate the two dimensions.
I agree with Melchior, but I'll come at it from maybe a practical point of view. The investors are interested in microfinance from a personal conviction aspect, but after being invested in this sector, after 3 years, 4 years, 5 years, then the financial return takes over, and we have to demonstrate that we are serious investors. The processes that are involved in lending to microfinance institutions in emerging market countries are the same processes that we use here, and that financial return is essential because it gives a sustainable aspect to this type of investment. And so the personal conviction is good to come into the investment, but that financial return in the long run takes over, and we have to have it. But I think I agree with Melchior, we can't disassociate both. So it makes financial and economic sense to provide these services, these financial services to people at the base of the pyramid in the long run. So it's more than just about personal conviction.
So in today's macro context, how can microcredit funds be used as a tool to balance out a global portfolio?
Okay, first I think if we should look back to our track record. So we have now about 12 years of financial returns, and we managed to produce a LIBOR plus 150 basis point after cost, approximately 4% over time on an annualized basis, which was a nice return if you compare it to the stock market or even to bonds somehow. Accumulated, it's a very good return. But now if you look forward, I believe there are still some very good reason to invest in purely in terms of portfolio diversification, because it's a short-term portfolio, closer to 1 year. You still have a very robust, the portfolio quality is very solid, rock solid now. LIBOR plus 150 for sure, and so you with short-term below zero. France refinanced itself a few days ago below zero at 2 years. So I think comparatively it's quite an interesting investment. And above all, you have a hedge. You buy a hedge toward coming inflation and steepening of the yield curve, because you are investing somehow in a node. So if yields are going up, you will go up jointly. But at the end, nevertheless, can we say that we created an asset class in itself? Meaning that asset class, microfinance investing, has its place into a balanced portfolio? I would say yes, for social investors. Because if you look at the country risk, the political risk, and we observe it in India, for instance, I believe the LIBOR plus 150 is not compensating that risk. But on the other side, it creates inclusiveness, a better balanced world, access to working capital for small entrepreneurs, and it's one contribution to a successful globalization. So, but you have to balance it. So it is an asset class for social-minded investors. And you have some pension funds which really have that vision, a lot of private individuals maybe. Of course, development banks need that kind of investment as well. So I think it's an asset class only for that kind of investors.
Definitely, and bearing in mind the aspect of risk, which is what you were highlighting.
Yeah, I think it's very difficult to calculate the risk premium we should have to compensate for the country risk, but for sure it's not 150.
As an investor, what is your view on this? Do you second him?
I do. I agree with what Melchior is saying. I think microfinance in a portfolio can offer diversification, but as long as we're not benchmarking the returns to traditional markets, because as Melchior mentioned, you have to have a different mindset to be in this sector. And so the social and environmental added value, mostly social added value, has to be quantified. And if it can be quantified, then the risk-return model, I think, is good. And so the way we look at it is a risk-return model, but we're adding the impact. So it's a risk-return impact type of Sharpe ratio. But we're not benchmarking these investments to the traditional markets, because if you do, then I think you take away the diversification, the efficient diversification approach.
So can you tell us a little bit more about that?
Okay, so as you well know, our fund, Blue Orchard Microfinance Microcredit Fund, started to invest in US dollar first at the beginning of the story. We were the first commercial player to invest commercially in microfinance. We started in US dollar, and very quickly we realized that we need to provide local currency. So we started to do it through our flagship fund with some hedging mechanism, which were very improving years over years. But at the end, we realized that providing local currency and investing in a local currency without hedging automatically or systematically, like we are doing in our flagship fund, could provide some very interesting risk-return characteristics. But the idea is to take advantage of low correlation, stable currency, some opportunities of appreciation of those currencies, and at the end, the swap market. That's why we teamed up with TCX, which is one of the specialists of those frontier currencies, working first for the development banks around the world and for Blue Orchard for years already, which will help us to identify some very interesting currency in terms of macro picture, appreciation, stability, and so on. And then we'll, with our analyst team and research team, define a few investment in those currencies. So it will be somehow a double return fund. If we look at our simulation, we made a lot of quantitative simulation to identify the risk, the correlation, and so on. We should get a LIBOR plus 500 after cost, with a risk of 4%.
Guillaume Taylor, do you have anything to add to this?
Well, I just wanted to add to what Melchior was saying about this new product that Blue Orchard has just come up with. In fact, by transferring risk from the MFI to ourselves, we're bringing down the risk of the overall investment because we can manage the risk in a more efficient way than maybe the MFIs can. So by taking on more risk, we're in fact bringing down the risk for the investor.
Yes, thus explaining the whole idea of the evolution of financial influx in the last 10 years. Well, thank you very much to both of you. It was great having you.
Thank you, Anne.
Back to you, Dorian.
Thank you very much, Anne, for that interesting insight into microfinance. That is all for right now, but do click back to the website for more interesting interviews like this. Goodbye.